There is no job in the world where you can be so wrong so consistently and keep your job more than an economist. What am I talking about? Going into Q1, economists, forecasters, bankers, investors, and tons of talking pundits around the world, they all put out these forecasts and they say, we believe the GDP growth number is going to be X. Now, of course, when they report the number, they take the growth in a single quarter and they annualize it. So, for example, if GDP grows 1% in a quarter, they say, hey, we are on a 4% annualized GDP growth trajectory. And that's how they report these numbers. Going into the Q1 GDP numbers, it was expected, it was forecasted by all these geniuses that GDP was going to grow 1% annualized. Well, we got the numbers yesterday, and guess what happened, fellas? The GDP growth was negative 1.4% annualized. That is a 240 basis point swing in the wrong direction. Not only were they off by 240 basis points, which literally just means you're incompetent at your job, but to put salt in the wound, they thought the economy was going to grow and the economy contracted. You couldn't be more wrong. It couldn't be more black and white. They literally thought things were going well, and instead things are not going well. Now, of course, why is this happening? Well, if you ask yourself that question, you immediately jump to the idea that the party is over. What do I mean? If you go back to March of 2020, what you find is that there was a liquidity crisis due to the fact that the government ordered every citizen to go sit at home because of the pandemic. And when that happened, there was short-term pain. 6.6 million people a week were claiming first-time unemployment claims. Unemployment in America skyrocketed over 10%. Stocks fell 30%. We saw gold down about 15%. And Bitcoin went down 50% in a single day. It was chaos. And so naturally, the Federal Reserve, central bankers, and elected officials all sat there and said, we have to do something. We can't just sit by and let the people suffer. So what did they do? They printed trillions of dollars and they started throwing it everywhere. They literally were bailing out entire industries like the airlines. They were going and sending out $1,200 checks to individuals. They were manipulating interest rates down to 0%. And they were just handing out free money. They were extending PPP loans all over the place. And then just saying, don't worry, you don't have to pay it back to us. And so naturally, they started a party. And they helped everybody get drunk on free money. The money was free. The money was cheap. And if somebody hands you free, cheap money, what do? You start spending it. You start buying things. You start investing it. You start lending it. Anything and everything you can do with that money to gain any sense of value. Whether it's something for you to consume or it's something for you to grow, the free, cheap money gets put to work. And that's exactly what they wanted. They wanted to mitigate the short-term pain. They needed to drive the velocity of money again. And so they handed out all this free, cheap money. Now, the problem is if you do that for 3 months, 6 months, 9 months, maybe even 12 months, people don't really have time to get used to it. But if you do it for 2 years, all of a sudden, people start to say to themselves, man, I bet you they're going to keep giving me the free, cheap money. And you start to change behavior. And that's exactly what occurred. We saw people continue to act stupid because they had free, cheap money. Now, you can't blame them because they had the money and the government kept pumping more and more money into the economy. They kept interest rates artificially low. And so the party raged on for literally 15, 18, 20 different months. But back in November, they realized, this inflation thing that we've been saying is transitory. Maybe it's not going to be transitory. Maybe we should stop using that word. Maybe inflation is going to be higher than we thought. And maybe it's going to be around for longer than we thought. And so naturally, they started to talk tough. They didn't do anything, but they started to talk about, we're going to have to taper. We're going to have to raise interest rates. And now the sophisticated investors said, that's a different talk track than I've been hearing. And so they went ahead and they stopped investing in various markets. They started to sell their risk assets and move into more value or reserve type assets. And so naturally, if all of a sudden somebody stops investing and then a lot more people stop investing in certain assets, the price begins to fall. And that's what we saw in November, both in the crypto market and also in the stock market, is the prices began to fall because the sophisticated investors realized the environment is going to change. The party is over, the punch bowl is going to get taken away, and we are going to have to go back to a world where the government and the central bank is not propping up the market. Now, as those prices have been falling, guess what also is falling? If I don't have money to go and make investments because I'm worried that capital is going to get more expensive and is not going to be handed out so freely, I probably am also not going to buy as many things either. So the same way that investments went up, as did the price of consumable goods in the good times, in the bad times, I stopped allocating as much money to investments, and I also stopped buying as many goods or services as well. And so naturally, that's where we get this contraction of the US economy. Now, for a recession to occur, well, that's 2 quarters of negative GDP growth. We got it back in 2020. Something tells me that it's not going to turn around here. And so my guess is that by the time we get the Q2 data, we will be officially in a recession. Now, how the hell can we go from a recession to all-time high stock prices, to all-time high inflation numbers or 40-year highs, and then back into a recession all in 2 years? Well, that's because the market is manipulated. All you're watching is central banks around the world. What are they doing? They simply are jumping in the game, and they're saying every time something happens, good times, we must intervene. Bad times, we must intervene. Good times, we must intervene. Bad times, we must intervene. The volatility gets more and more extreme. What we need in the world is free markets. We do not need people intervening in the market. Let the free market take control. If they were to allow to do that, there may be short-term pain, but we would get on a long-term record where we would be on a path to a more sustainable, less volatile economy. That's not going to happen. And so naturally, we got that 1.4% annualized contraction in the economy. All of a sudden, people are waking up. But it's a weird, weird world. If you expect plus 1%, you get negative 1.4%. And at the same time, all that's happening is very high degrees of inflation at a 40-year high. What happens when the economy is contracting and the inflation's high? Well, ladies and gentlemen, here's what I think is going to happen. I think that they are going to continue for the next 1 or 2 rate hikes. They're going to keep trying to do it. They're going to push us further into a recession. Things are going to get real nasty out there. People are going to panic. There's going to be all sorts of chaos and public pressure. Heading into the midterm elections, all of a sudden, the Democratic Party, they're going to tap central bankers on the shoulder. Hey, psst, Uncle Jerome, cut it out. We got to end this recession. We're going into election, big dog. Cut rates. Get free money into the system. And probably by the end of Q3, what we are going to see is we are going to see the Federal Reserve and elected officials, they're going to go back to party mode. They're going to flood the system with free money. They're going to go ahead and start dropping interest rates. And they're going to realize that no matter how much they're trying to taper, they are going to push the economy into a massive recession and potentially a depression, which they're not going to allow to happen. And therefore, they will go right back to all of the easing monetary and fiscal policy that they previously were conducting. So if that is to occur, big if, but I believe it will. If that is to occur, all you as an investor have to do, just get out your diamond hands. Just hold on. Because literally there's going to be lots of volatility ahead. It's kind of like when you're on a plane and there's a bunch of turbulence. Not much you can do. Just hold on. You get to the other side of it. That's my guess of what's going to happen over the next 6 to 9 months. Now, if this is what happens, it's going to be absolutely fascinating to look back in the history books to see 2020 recession. Then a stock all-time high. 2021, continuous stock all-time highs. 40-year high inflation. 2022, bam, recession. Bam, right back to stock all-time highs. These people have lost their minds. They only know how to intervene in the market, and they are going to continue to do this because their entire incentive system is simply to address the short-term pain. That short-term pain happens in both directions. Can't have too high of inflation, can't have too bad of a recession. But if you only can manipulate interest rates and conduct all sorts of undisciplined fiscal policy, then, ladies and gentlemen, you get what we got, which is high inflation and recession, same time, double whammy. Call it the economic poison pill because we're all screwed. Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.